Opendoor is a digital house flipping company. It's a meme stock whose shares are up 1,650% in just the past couple of months. I learned about it from a friend of mine named George Noble. George is a skeptic, but I wanted to take a look myself. And I find Opendoor just fascinating from a sociological perspective. It makes us wonder, what are investments these days? Are they pure investments, movements, or financial entertainment? Opendoor seems like a little bit of each. From a traditional investment perspective, Opendoor gives us some yellow and maybe even some red flags. It's unprofitable. Its competitors tried its business model and failed, and its other opportunities are unproven at best. Opendoor has arguably had revolving door management and is arguably a bit aggressive with revenue recognition, legal but aggressive. It has a huge amount of convertible note overhang, specifically hundreds of millions of notes that convert at $1.57 per share. With the stock price at $8.30 per share roughly as I record this, that's nearly $7 a share of dilution. That will certainly or should certainly affect equity investors. And Opendoor has paid some fines, $39 million to investors and $62 million per an FTC settlement to home sellers for allegedly, in both cases, allegedly exaggerating its AI pricing capabilities. Still, there are some positives. The company is edging closer to profitability, especially on a per unit basis, and its new CEO is the former COO of Shopify, a very legitimate company, and this guy stands to get 82 million shares of Opendoor if he can get the stock price high enough. But still, overall, from a traditional financial perspective, Opendoor certainly looks wildly overvalued and wildly risky. But from a meme stock or a kind of movement slash financial entertainment perspective, that's like kind of the point, right? Opendoor looks a lot like GameStop. It's a small market cap company who's vulnerable to a short squeeze, a left for dead company with low float or previously low float that retail investors could meaningfully drive up. Now, whether that's collusion, illegal collusion, or just legitimate investing is a separate topic. But the point is, it's a meme stock. One of its leading investors has been all but parked outside of the house of a Toronto musician named Drake, trying to get Drake to promote the stock. Normally, that would be ridiculous, right? What bearing could a musician's endorsement have on the economics of a company? Well, with Opendoor, maybe it could have some bearing. In fact, this twist to the conventional laws of investment physics is kind of sort of the whole meme stock point, right? I mean, economics is a social science. If enough people decide that a thing has value, well, then it does, basically, right? And GameStop leveraged that into a new economic reality. So if Opendoor can't succeed at its real business, maybe it has a plan B. Issue a bunch of shares in a secondary offering at a very high valuation, become sort of a meme stock mascot, and deploy that capital by buying Bitcoin or something like that. Ultimately, what is Opendoor? Is it an investment? Is it a movement? Is it financial entertainment? I can't tell you, but I can say the answer will be decided by the long-term capital in Opendoor's investment base.